Hey there, welcome to saas.unbound podcast. I'm your host, Nadeina, head of growth at SaaS Group, a serial acquirer buying wonderful SaaS businesses to take them to the next level. And here I chat with inspiring founders and experts to get an inside scoop on how they made their business a success. So today with me again is Tim, founder of SaaS Group, and this is our biannual recap and the last episode of the season to just talk about what happened, what changed at SaaS Group, what changed in the M&A, and just chat all things SaaS. Welcome, Tim.
Wonderful. Great to be here again. Is episode number 3, 4?
That's episode 50 of a fifth season.
Fifth season, 5. Okay, wow.
Technically 250. So there you go.
Congratulations.
Thank you. It's been a ride, huh?
250,000.
Yeah, crazy. When are we hitting that number? Oh my God, we're going to have a big party. But yeah, I mean, maybe to those for whom this episode is the first one of the podcast, what is SaaS Group and what do we do?
Well, at SaaS Group, we are a serial acquirer of SaaS businesses. So we acquire small, kind of usually 1 to 10 million ARR businesses, preferably product-led growth. Main topics would be developer tools, marketing tools, productivity tools, but generally we're fairly agnostic. And then the idea is to help take them to the next level, because kind of what I've noticed over the years is there are a lot of great founders out there who are really good at bringing things from 0 to 1. They love getting product market fit. They love getting those initial clients, and then they grow a company. Some do that completely alone. Others get a small team. But at some point, people are tired of doing the same thing, and they want to get back to kind of that zero stage where they can build something from scratch. And then very often it is a good time to sell. It's great if you want to do a company for 10, 20 years. That's great. A lot of respect for that. But also it's great if you're that person who knows, okay, I can bring things to a certain level and then sell. And that's what we're here for, to have a founder-friendly way of buying those companies and bringing them to the next level.
You know, over the years of working at SaaS Group, and maybe it happened to you too, but I've heard people call us an accelerator. And I was like, oh no, like we're not. But there is obviously that part of acceleration and adding to growth and to product and to teams. So how does it work? Like what is life after acquisition by SaaS Group?
Yeah, great question. And on the accelerator, I'm with you. I think the term is a bit burned, like accelerator and incubator, because there are like so many corporates in particular who've set those things up and say, hey, we're going to accelerate startups, and they usually create a big mess. Yeah, we don't really like it, but at the same time, it's what we're trying to do. It's trying to come in and accelerate the growth. And what we then usually do is, I mean, every company, every founder is great at something. Everybody has a superpower, not just founders. I would say everybody in life has a superpower. And I think one of the core things also as an employer is to find out what is the superpower of every single person. But then also everybody has blind spots and weaknesses. And we come in, we look at, as part of the due diligence process, we look at kind of what are the things you're really lacking and where can we accelerate areas. And very often, for example, we have super technical founders. They're great at building a product, super good infrastructure, but then they miss out on a lot of things when it comes to pricing, to marketing, to just simple things on customer onboarding, customer success. None of that is rocket science, but if you do it for the first time, it kind of is rocket science. And if you're geared towards the technical side, you also neglect those things, and that's what we're trying to fix. So sometimes we're more of a fixer first than an accelerator, but then over time it leads to acceleration, at least in the cases where things go well.
All right. So, since, I already said that this is going to be a bit of a recap, and if you're new to this, maybe go find other conversations we had with Tim, for example, at the beginning of this year, reflecting on 2024. But now, almost looking back at 2025, maybe it's a bit too early, but do you see a shift in the SaaS M&A market? compared to 2024? Are there still, those waves from 2021 and the crazy valuations, or is it now new with AI? Like, what's happening?
Well, AI, of course, is the big shift. And I mean, it was there in 24, but I think we all learned a lot over the last year on kind of what works, what doesn't work. It's amazing, kind of the breathtaking speed with of innovation in that field, of models accelerating. Also, the whole agent topic. I would say when we had the recap at the end of 24, maybe some insiders knew about agents, but it became a thing kind of much more mainstream and kind of rethinking a lot of the processes. And so, yeah, I think AI is really rattling everything for better or worse. I think we're seeing a lot of great opportunities on how we can rebuild, and we can dive deeper a little bit on how we got a few of the SaaS group brands change their business models even with AI, or just increase efficiency. At the same time, we see businesses really under pressure. Just this morning, is as we're recording, is October 2, and there was this big news out that multiple SaaS stocks crashed, like HubSpot, for example, crashed like almost 15% overnight just because OpenAI brought a new model that could now send emails, which is one of the core functionality of a CRM. And so multiple stocks crashed like big time. And so there is always this insecurity, is like, okay, will AI kill my business? So I think the year has gotten really, really interesting. Overall, I think the SaaS market is still somewhat similar to last year. It's not like crazy growth as it was in 21, 22, but it's also not in a total slump. Revenue growth has picked up a little bit again, but also there, a lot of the AI tools are winning versus some of the legacy tools are losing market share. And I think we're seeing that as a continued trend, which is why AI really isn't optional for a company, for any SaaS company. It's really, we can dive deeper a little bit into that, what we mean by that, but it's kind of a force multiplier everybody needs to work on. And everybody is. I mean, I don't think I know any SaaS company who says like, oh, this AI thing is a fad. Let's just ignore it.
Yeah, absolutely. And as you know, we declared 2025 the year of AI at SaaS Group. Let's definitely dive in there. Just to continue with my previous question a little bit, were there any like unexpected hot acquisition targets in 2025 apart from AI?
Apart from AI, I don't know if they were unexpected. We continued. I mean, we've done only 3 acquisitions so far. 2 of them announced. One is a shipping platform into that helps Shopify and other platforms users to improve their shipping, Advanced Shipment Manager. And the other one is Duckboard, which is a subscription service for customers and businesses for displays. That's actually the first time we did something with hardware. Maybe that's a bit surprising, but the software component is actually the tricky one and the interesting one. It's a subscription business, but there is a hardware component which is mainly outsourced, and we debated quite a bit whether that's acceptable for us, but then decided we really love this business and we did it. And the third one, we haven't announced that, but it's going to be in kind of a blend of social media on one side, but also very API based. And we're still big believers in the API world, especially in times of AI where, yeah, imagine agents talking to each other. Very often they need an API to access certain data, in this case, social media data. And so an API business is a bit more shielded, we would argue, in the AI wave towards disruption than something which really heavily relies on user interfaces, because what is disrupted is not the actual underlying stuff, it's the user interface stuff. And so we're betting more and more also on API based businesses. We've always put a bit back on that, bet on that, like with Scraper API and many others. But yeah, that I think we're accelerating. So not super surprising, maybe except for the hardware business.
That was surprising for me
That
too.
was surprising.
I was like, wait, are we doing that? And maybe you can talk a little bit about that, because I mean, we've always been very straightforward about what kind of businesses we acquire, and we had this line year after year that we prefer bootstrapped B2B SaaS businesses. We do already have a business that is somewhat more B2C than a B2B. And now we are adding Duckboard, which is, again, also has this B2C element plus hardware. So it's kind of outside of our comfort zone. So, what does it mean for sellers? Does it mean that we're looking for other options? Does it mean that we're just exploring to kind of testing, experimenting with what works and what doesn't? What's your take on this?
Yeah, I mean, for first, it means that very often you always see twice or three times in life because Duckboard actually we had in the deal flow over a year ago. And back then we declined it and somehow we had a fresh look at it. And sometimes there are those things where, you know, I mean, the same business. You look at another time, and then you're more open in your mind or whatever, and then suddenly it resonates. And I think that happened here. I think for the first time we said, now it's hardware, and the second time we're like, wait a minute, is actually that ticks a lot of our boxes. It's PLG, and there isn't that much of a difference in product-led growth very often between consumer and B2B businesses. It's the way how you sell a product with more marketing led, more product led is very often very similar. Also, sometimes the subscription sizes are also not that different. Also, like we do have a sizable business component at Duckboard as well. So a lot of businesses use Duckboard, for example, to put their KPIs on the wall of this office and then constantly refresh them, integrate them with their databases. And so I think there is a B2B component as well. Then the team was bootstrapped. Like we love that team. It's like 5, 6 people, super lean, super humble founders who've grown this in an organic way, and that's what we have kind of really deep respect for, people who are super capital efficient. And geography, mostly US based, some Europe. So it kind of ticked a lot of the boxes. And then when it comes to the actual software, the software is the core piece, actually integrating all the things every person cares about to see. So you can put calendars in, but you can also put in a lot of social media, and that's again one of our main expertises is you can. So, for example, a lot of people gift a duck board to the grandparents, and they automatically put photos or social media on there. So yeah, imagine your grandparents then having daily fresh photos of their kids right in their living room on a big screen on the grandkids in the living room, and they are really kind of the main competence is this getting the information from social media, making sure it displays well, which is very similar to our juicer business, where we do the same thing for websites. So once we had that second look, we're like, wait a minute, this is actually, yeah, there is a hardware component, but it's mostly outsourced. This is not the core competence of this company. It's not hardware. It's actually providing this subscription service. And then we like the business. And so far we have not regretted it. It's a great business. It's a great team, super smooth, and it's a lot of fun. And business is a lot about experimenting. To your other point of are we deviating, or is it a test or an experiment? I think always business is a lot of about experimenting. Whether you have a product you experimenting with. In our case, experimentation also means trying new things. We tried buying businesses out of insolvency. We're trying different geographies. We're trying different sizes, and I think we're learning on what things we're good at and what not. Kind of spoiler alert, I think we've learned that we're not that good at buying businesses out of insolvency. That is a different beast. So yeah, we're also experimenting and learning and doubling down on the things that work and then abandoning the things that don't work.
Yeah, that makes sense. I was very skeptical about Duckboard, to be honest, at first
You don't
when
have
I
the
saw the
duckboard
product.
yet in your
I
in
don't,
your house.
I don't. Maybe you should, send one to me, and I love it. But I got to know a founder of a very similar business, but they only have that software component. They don't have the hardware. And when I learned that basically, yeah, you can be fairly successful. I mean, they're quite a lot smaller than Duckboard, but you can do this business with just the software part and hardware, just what they decided to add. Then I was a bit more convinced about this one. But yeah, it's a great experiment, and also that B2C part, I think it can be a lot of fun for the team because we do have a central marketing team that I think a lot of people could be really interested in experimenting, working on a B2C product apart from everything else. All right, so let's come back to AI, because it's a big topic, and like you said, have been adding AI to our workflows. We have been experimenting with AI in products. We have hackathons, hackathons. We actually finished one yesterday, and I even got to participate out of curiosity.
What did you build?
So for one of our brands, it's called Bcast, and it's a learning platform. And the tool we were supposed to build was for elevating the learning experience. So enhancing your experience during the process, during the presentation or the course or whatever is going on there, and then making sure that people are still engaged later, or they can save something, they can go back to what they learned. So, it's not just a one off, I sat through this 3 hour presentation and then boom, forgot about it. So yeah, it was something that the entire company was able to engage in, and it was very very much encouraged. And I think it's a really good way to also, for me as part of the central team, to go a little bit deeper into one of the brands and see, okay, what can I do for them? And for them, maybe to get this external bit of inspiration, even if nothing works. I mean, even if all of our projects are dumb, maybe somewhere there is a little seed of inspiration. But yeah, why are we doing that? Why do we think that in 2025 there is this one big goal of saas group really becoming this one acquirer that first uses AI in day-to-day operations to maybe outsource some kind of operational load. Second, it's a company where we have the expertise so that when we acquire a product, we can actually enrich it with AI. Why do you bet on this?
Yeah, I mean, the why I would say is almost simple because I think we've all personally experienced that AI is really the biggest shift that is happening to me kind of since the invention of the internet. Maybe mobile was a bit of a blip that suddenly, you could take the internet in your pocket, but I haven't had, and I think same for many out there, I haven't had that same wow effect in the last 20 years, which I had kind of with the first major query put into ChatGPT, like two and a half years ago or something. And I think since then, that experience, I think we've all seen it with so many tools, whether that's in our daily lives, tools like Jamie, which record a meeting, and you have a meeting, and afterwards you get this top notch summary, which is just amazing. Or I have this AI sitting in my inbox pre-writing emails, and a lot of the developers have, of course, many tools that like Copilot and tons of others that help them develop faster, and list goes on and so forth. I think we're all experiencing this, and we all know, okay, there is this fundamental shift happening on how we work, what is important, what not. Also, all the SEO businesses, the question on how you get your traffic is, you see that, I mean, Google is still obviously the number one traffic source for any business that relies on search engine traffic, but traffic from LLMs, ChatGPT, and others kind of is just going through the roof, growing 20% month over month, and you can see that time when those lines are going together. And of course, also Google integrating the AI snippets means you have a different way of how you get your customers, and really a lot of things have to be rethought. And so at the end of the day, it's really kind of two things. One is internal. How can we all get more efficient in what we do? Because AI will just raise the bar. Just like these days you couldn't have a paper catalog and shop things. It's like you need an e-commerce store. That's what the internet did to mail order, and so it's really just this shift in expectation. The other things is really kind of what business models are completely changed, and what product offerings are new and can happen that weren't possible before. And those two things are super super interesting. And yeah, we're obviously working heavily on both.
So, what exactly is changing? What are we doing for the brands and also for, for people to engage with AI and to learn with AI? Because I feel like for a lot of companies, for a lot of teams, AI is something that we all want to leverage and we all want to learn. But let's face it, we do have our jobs, and sometimes it feels like additional work, right? So I have to learn more. I have to disrupt my
Yeah,
entire process
right.
and go
Yeah.
and learn this new tool. And I'm not even sure how long, like where the limitation is and how long it's going to be helpful to me, or if it's going to do the stuff that I actually want. Because let's face it, I don't know how to prompt it correctly from the get-go. So yeah, what are the processes there?
Absolutely, and that's a great question. I mean, yeah, the eye shift is happening. Let's take that for granted, but it takes time, and we definitely, as management, as founders, we underestimated the amount of change management and teaching required. Also, the amount of hand holding, and they're always like with every new technology. There are some people who go ahead and who are really at the forefront, but we need everyone to learn this and to be involved and to improve. And now a lot of work actually happens in our brands. At SaaS Group, we work very decentrally. The brands are self-organized, and we have some brands. Ad Search, for example, is my favorite example. They kind of redefined their entire product offering and served entirely new customer groups. And before that, they were pretty stagnant. It was one of our brands where we were like, oh my god, it's like maybe that offering is not good enough, and they really redefined everything, and now they're growing like crazy, and that's really promising to see that we have those examples. But then also we have others who struggle with this, and it's important to have additional offerings and really kind of take them by their hand and go through this together. And it's taken some time. It's taken us longer, but we hired an awesome new head of AI, Belma Ibrahimovic. She, interestingly enough, she was found by an AI. We started. It's not a story. We couldn't have made it up better. But what we did is we started at the beginning of the year. We started experimenting with AI recruiting. So looking at, we get a lot of applications at SaaS Group. I think over 30,000 now a year. It's crazy. But we've also often seen that very often the best candidates are the one whom we proactively search. So active sourcing, but that's a lot of work for recruiters. And so we have an active sourcing AI at SaaS Group that helps the recruiters. And that one then contacts people on LinkedIn in a very smart way. And then, like, once someone responds, I think the person takes over, and that AI found her. And she just joined at the beginning of the summer as the new head of AI. And she's an absolute trailblazer. Really looked at everything we are and said, hey, we're not as far as we thought, and I think that is true. We are behind our initial expectations. We need to step up. We need to really enable everyone, and enabling means tooling. It means teaching. It means finding the right methods of collaboration, but also guiding people, because there are like so many tools out there. If people need to test everything, as you said, Anna, we all have a day job, and we can't test 10 tools every day. So sometimes it's good if someone like Belma says, okay, test this for that job and this one for that. And sure, everybody's free to test things, but a little bit of guidance is always good. And so, yeah, we're kind of hitting reset now with her, and doubling down on that year of AI. And so far, I'm very, very hopeful that we're going to accelerate that transition.
Yeah, I really appreciated this. And it seems like a teeny tiny initiative, but when we just got, one day I received this email saying that I got a couple of hours blocked for whatever AI. And I was like, I didn't do that. What does it mean? And it's just, and apparently it was just kind of a random blocker. And yeah, obviously I don't have to do it right there during these 2 hours, but it's good to know that there is time allocated
Yeah, yeah,
during my workday that I can just you know, watch videos on YouTube.
And yeah, good point. I think it's like with every behavioral change, you need that time allocation. I feel like that with workout, it's the same. We talked a little bit about workouts before the podcast started, but there, for example, I don't know how it is for you, but for me, it is I need to block time. I need to say, okay, I do this like 6 o'clock to 7 o'clock, and then I do it. If I don't block it, I just continue to work. And then, yeah, well, day's over. I haven't done anything, but if I block things, I'm very happy that I did. And scheduling time, I think for any behavioral change is so important. And yeah, AI is no different because it's something new. Like our brains need to digest it. We need to make time and test things and experiment.
Yeah, absolutely. When I and to come back to this little AI hackathon that we had, it was unlovable. And I've already done a few projects on Lovable on my own for my day job. So there are a couple of
Yeah, you like
different
your M&A
tools,
course is
M&A
amazing. Yeah,
course. Yeah. And so I'm, pretty savvy, I don't know, with Lovable, but it took time. And this time with this AI hackathon, I think I built this tool, I don't know, maybe in under 40 minutes because I knew what kind of prompting Lovable likes. I knew how to debug it. I knew how to, a bit more of this programmer lingo that it prefers over just a normal English. So, yeah, with learning, it's amazing. But without just jumping into like whatever, you're like, oh, okay, that doesn't work. AI is a bust.
interesting. Yeah. Yeah, yeah, like with everything, the second time is much. So for comparison, like you said, 40 minutes. How long did it take you your first big lovable project? So that M&A course?
So no, the first one was actually M&A data room, and I
The data
admit
room.
it, it was a big
Yeah.
project. It was a bit too much for the first try, but even the second was just a checklist for the M&A course where you can. It's also about data rooms, but it's basically just a landing page with a checklist. It's interactive where you can go and check which documents you've already sent to your acquirer. And that took about a day, but I was horrible with debugging. Like whenever there was a
Okay.
bug, it was just, okay, you're not doing it right, can you please blah blah blah. And it was not responding well. But
Okay.
now, since I changed our communication to prompts, now it's a lot easier.
Wow. Yeah, it's a big improvement from 1 day to 40 minutes. I mean, that's what I find so fascinating with AI, how much of an impact multiplier it really is, kind of allowing all of us to build things, deliver better products for our customers, work more efficiently, and then focus on what is really important. Like if you think about how long certain things took, research, competitive analysis, classifying data sets, interpreting data, or like in your case, building websites. And now those things are just amazingly fast once you figured this out. It's like, it's such a game changer.
Yeah, absolutely. I mean, I still feel like we have to understand the complexities and like what it takes to support projects that are built with vibe coding. But at the end of the day, like if it's something marketing, small checklists, small lead magnets, something easy for experimenting, I think this is absolutely incredible. So yeah, okay, let's maybe come back a little bit to M&A and how we acquire companies. And one of the things that we really started to double down this year is events, and you now go to some conferences to represent saas group, and the recent one was TGS Con in Amsterdam. And there, and tell me how true that title is, but your talk was called the No BS Blueprint to Make Buyers Chase You. So is there such blueprint, and what was the talk actually about?
Yeah, funny that you're asking that because I have no idea who came up with this title. TGSCon was great, by the way. I love the conference. Organizers were super nice, great crowd. Amsterdam, obviously, is It's a very nice city too. So everything perfect. Had some good roundtables, good fireside chats. Got to know a lot of good people. I don't have a blueprint for buyers chasing us, to be honest. I mean, probably the best blueprint is always build a great product, and yeah, sure. Then of course make sure people find you, but there is no silver bullet to any of that. But yeah, very, very good conversation. But it did show, and I hosted a few roundtables on exactly that topic. It did show that at the end, very often the go to market is the main problem for any brand, no matter what you do. Is like there with any SaaS tool, with any AI tool, there are dozens of competitors out there who all do something similar, and then there are also dozens of companies that do things good enough, and there's also of course always the choice of customers to not engage at all in this field. So the biggest competitor is always doing nothing or using a spreadsheet or something. That's always the number one competitor. So really being heard, being kind of finding out what is really the value you bring to clients. That is the core challenge, I think, for every company out there, because it's not building anymore. It's really not for SaaS tools. It's not building the product in the first place. It's go to market is the bigger challenge to sum things up.
Interesting. Sometimes we're in a situation where SaaS companies chase us.
Yeah.
But I think I saw the statistics for this year, and we also say no a lot. This is somewhere in the 90% of all the inbound deal offers, we say no to them. Why does it happen? Like, why are we so picky?
Well, I don't know if we're particularly picky. I would say almost in any funnel. Sometimes I say like life is a funnel, no matter what you do. Like, you screen candidates and then out of that, only a small percentage you actually employ. You screen deals, you only invest or buy a small percentage of them. You get offered a lot of things as a customer, especially with AI tools now. My inbox is full every day of really well written messages. It sometimes I sometimes respond to them, but it's like only a small percentage I end up choosing. So a lot of things are a funnel, and I think the deal funnel is no different. Our rejection rate, if you really look at what do we see versus what do we buy, is even more. It's like 99.9%, 7 or something like that, to be exact. And it is just because a lot of people just reach out, and I think that's good. I think it's good that you reach out to multiple people, because you never know what really resonates at that time. And then it's always something that doesn't really fit. Like some businesses are too enterprise heavy, some are too big, some are too small, some are in the wrong geo, some are too big teams. We like smaller teams because it's much harder for us to integrate a 30, 40, 50 people company than it is to integrate a 5 people company. Very often it's the price. People look at stock prices of public companies. It's like, hey, wait a minute, there are those AI companies. They're worth like 100 times revenue. Is like, I'd be happy with 50, but it's like, no, sorry. Like in the small enterprise market, small businesses, they trade to maybe 2, 3, 4 revenue multiple, or 7, 8, 9, whatever EBITDA multiple, depending on lots of factors. So price is an issue, lots of things. The topic, of course, itself, what does the product do? And yeah, it needs to somehow resonate. And there's always a trade off. Like nothing is always perfect. Every business we looked at, there's something where we're like, we're not so sure about this, but then, hey, at the end of the day, we need to make some trade offs. And so usually individual things are mitigable risk, and so we need to then accept that there's always one or two things that don't work. Yeah, overall I think we're just as picky as any other acquirer, but it doesn't mean that people shouldn't just send it. Like, we respond to every email, and a no is quick, or a hey, let's re-engage in a few months. Sometimes we even have advice that we can point people to the right brokers or to other acquirers, and we try to be helpful. But yeah, overall we are very happy if people email us, even if we say no.
It's very interesting, to be honest. I think I've been getting, and I'm not an M&A team, just to put it out there. I'm not saying no, don't email me ever, but I think in the last 2, 3 months, I've gotten more, hey, we want to sell
Okay,
our company.
interesting.
Can we talk to you? Than in the last 2 years. I don't know what
That's
happened,
interesting.
but it's an interesting
Maybe
shift.
you've become more famous.
That's that.
Well,
Exactly.
you think it's the market?
Maybe. I don't know. I honestly, I have no idea here. And to be even more transparent, I don't necessarily go and look at the company right away when I get an email like this, because I just send it to our M&A team and they will figure it out, because usually they need a glance or two to say, okay, this is definitely not the one. So, but yeah, it would be interesting to maybe go back to those emails and LinkedIn outreach and see what kind of companies they were, to maybe find a pattern there.
Yeah, that would be interesting. Maybe it's a combination of both. I mean, you've become more known in the market. At the same time, I think your hunch is correct that there are a little bit more companies coming on the market. I think some founders are uneasy about AI developments, rightly so, because it is shifting the markets, and some businesses are growing, other businesses are shrinking as the result of AI. And if you're a founder, you have all your eggs in one basket. You own this one company. It is usually the majority of your wealth, maybe everything of your wealth. A buyer like SaaS Group can accept a certain amount of risk because we have businesses that are going well and we have other businesses that are going not that well, which means usually stagnating or growing very slightly. We also had businesses that tanked. So far, it was just one out of 25. So knock on wood, but that's okay because we have a portfolio approach. So it can make economic sense for a founder, even if he or she says, "Oh, I love my business and I maybe want to continue with it for a few years," but to sell, to take some chips off the table, hedge against the AI risk and be like, "Okay, I'll continue. And if it goes well, I'm going to be happy. If not, I've hedged my bets, but I'll put some money into my private pockets because you never know. Maybe my business is toast in 3 years. And then I would be really biting myself in the ass for not having sold during the time when it was still possible."
Yeah, absolutely. What is, in 2025, what is your hack on how to find those gems and how to assess companies and how to make sure that, okay, we are betting on the right company, right people, because team is also extremely important, and on the right trajectory?
Well, it's a great question. I mean, I don't think we have a silver bullet, to be honest. We know a lot about many industries, but at the same time, I mean, we have no crystal ball and we can't predict the future. We're trying to, yeah, look at all the things you just mentioned. Team is very important because an A class team can always turn things around, and an A class team will always innovate and go with the market, while a B team might get stuck. Traction, of course, is always an indicator. Are there still new companies, new customers coming in? If there are, there is a higher likelihood that product market fit is still there. But then we actually also look at what could the product be? Could it be adaptable for the AI era? Is it, for example, does it have proprietary data sets? Is it API ready? Could it connect into new things like MCPs as part of the AI world to actually accelerate growth at a time when everybody builds websites with AI services, but they might need underlying services which then connect. So a lot of those questions are things which we try to understand during the due diligence phase. And then at the end we need to make, yeah, basically we need to make up our mind and be like, okay, are we going to risk it, yes or no? And price, of course, also plays a role. If a price of a business is reasonable, then we know, okay, there's a high likelihood that this business, even if it is just around for 5 years, will still be an okay payment. While if the price is 10 times earnings, well, 10 years is a long time. In 10 years, a lot of things can happen. Then we really have to have a plan on how we develop that further. So price, of course, plays a role, because with a price, there's the question on how long does it take for us to amortize the purchase price.
Okay. So, what would be your, like, if you had to give one advice on how to sell in 2026 already, maybe? Is it too early for this? What would it be?
Well, our first advice would be, of course, to read our M&A course. No, but I think we've said that before. No, joke aside, I think I mean, first and foremost, the best advice always build a great business. Like if you have a great business, you continue to innovate on the product, you build in a few AI things yourself on the product. Like how can you leverage AI within the product, but also in the product, within the company, but also in the product itself, to make it more attractive for buyers and to show that there's continuously new MRR coming in. Then I think that continues to be the best thing, because new MRR is a proxy for still existing product market fit. If we look at companies that are declining, what you usually see is you see that maybe there's still little growth, but the new MRR declines every month, which means there are fewer and fewer people who are making a conscious choice of signing up for your service. While yeah, you might have some stickiness. Churn, of course, is always an important indicator to get churn down, but then you have a residual base, but that doesn't say a lot about your current product market fit. And nothing says current product market fit better than new MRR in the current market. And so I think that would be the main advice. And then of course, yeah, do your homework, get a company M&A ready, for which yeah, the course indeed offers a lot of help, but it really is about building a great business first and foremost. Then you'll always be able to sell it. Easier said than done, but yeah, that's
Exactly. But yeah, it makes great sense. As you were talking, I kept thinking that, you obviously run SaaS Group, but you also make a lot of investments. And this is probably a very different kind of betting game. And I feel like maybe we should have a one short video where I could give you some profiles of companies, like, okay, and a 15-year-old company, very sticky, great product, PLG, blah, 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 no AI, SaaS Group or TS Ventures. And we would go like this for a while, because it's interesting how, you have this context switching all the time, and how as an investor you make probably different decisions on what to go with. Like, if now we would get two companies reaching out to us for a sale, and one has been there, so your household product, great customer base, not really growing, but maybe with a few fixes, like you said at first, and then a few experiments and testing, we could get it to grow again. Or another one which is growing super fast, and it's a solid product. It's not just an AI wrapper. People
mm.
are loving it, there is a brand, and yada yada yada, but it's already AI. It's a little less stable. What would get the priority? What would you rather go with?
Well, that's a great question, and that's also why I have this for two separate vehicles. SaaS Group originally was born out of my frustration in angel investments. That was part of the original founding story 8 years ago. Is that I have done in angel investments. I was so frustrated because I get a pitch deck and maybe some initial fluffy product, not much traction, and people wanted like 5 million valuation for that, and that was kind of the going rate. And frankly, 7 or 8 out of these early stage startups fail. And not all the other ones become unicorns, but a lot of them just flounder at some point, and maybe there's 1 out of 20 that becomes a unicorn or something. And so you have those wide swings, and then you have all those great businesses that just run well. They've been around for a while. They might not be growing 100% every year, but they're growing 10, 20%. They have great product market fit, low churn, and they deserve a home, and they deserve to be continued. And very often, as I said at the beginning of the podcast, so coming full circle here, is the founders might see themselves as builders again, but they're almost handcuffed by their own success. Because if you've built a business that does 2 million, 3 million in revenue, and maybe a few 100,000 or even 1 million in profit, well, that's amazing. That's success that like 99% of people will never reach. So you continue with this business, even if you're miserable is maybe too strong of a word, but even if you're not fully happy because you want to really go back to building, and that's what we built SaaS Group for. And with SaaS Group, we also only acquire 100% of shares in businesses. We have earnouts, so we can have a participation for the founder to continue. We also love if founders want to stay around for a while, but it's all optional. We have also have founders that don't want to do that. With the venture business, it's the opposite. It's like only betting on the team. It's still very early, but everybody's kind of, okay, how do we make this company worth hundreds of millions? And it's a very, very different game. And it's fun, but it's also can be super frustrating because the failure rate is just so high. So it's just two different conceptual models, and they both have their justification. And we could probably have a whole series on its own. Is like, when is venture capital the right choice? When is bootstrapping the right choice? But yeah, both are models, both work, but they all depend on what you do, what your own risk profile is, what you want to achieve, and both is fine, but different, very, very different buckets.
I think we just came up with two new
New podcast for episode
formats.
6.
Yes.
Good.
But yeah, thank you, Tim. I mean, it's always great talking to you. It's super exciting to, to learn a little bit more about how we do it with AI at saas Group and what the goal is. So yeah, thanks for sharing this.
Well, thank you. It was a pleasure.
Yeah, looking forward to the new recap.
Number 250 is in the bag and off to, yeah.
251. Who's gonna be next? Let's see. But yeah, thank you for sharing this and take care.